Absolutely. So you're diversifying your risk, because tomorrow if your business goes
Yeah.
bust, if it goes bust, which is very unlikely, but I'm saying if it does, just hypothetically, if it does, then you have a back.
You've
You
lost
have,
all that money.
yes, you have different backups where tomorrow you know that if this goes bust, at least I can feed myself with the extra money that I have, which I've invested, or which I'm putting in a product where I'm getting money. Okay, so now if you tell me what you said is that you invest to get income, you're close to what you're saying, but most of the people invest to because of capital appreciation, not because of income only. Income is a
Yeah.
small aspect of uh, of investing. It is an important factor of investing, but it's a very small factor. The bigger factor is that your capital appreciates. When I say capital, I mean if you put in 100 rupees and it becomes 110 rupees, that means you have grown by 10% or 10 rupees, correct, in 1 year.
Yeah.
So that is why people invest, because they want capital appreciation. So now what I'm showing you out here is I'm showing you all the possible assets that you can invest in. There's nothing more than this. If you have 100 rupees and you want to grow your money, this is the only things that you can invest. There are a couple of other things, but we don't get into that because those become financial products of abroad, not of India. I'm looking at only India, right?
Yeah.
Okay, great. Okay, it doesn't become 110. It's not simple interest. Simple
Yeah.
interest meaning you would keep compounding at 100 would be your base value, and everything would be
And
only
you'd keep
compound.
in,
Yeah,
yeah.
only your return would be, your principal would be 100 and your return would be on 100. But in
Yeah.
compounding, you add your interest back to your
And then that
principal.
becomes your new principal.
Yes. So you add your interest back to your principal. Okay.
Yeah.
And the whole world works with compounding interest. If a bank goes bust, the rule on the bank is if you have any fixed deposit with the bank is liable to only pay you 1 lakh rupees, which the government pays if a bank goes bust.
Oh,
Whether you have 1 crore or whether you have 100 crores, you will get back only 1 lakh rupees. So the fixed deposits is less to zero risk, because there's never been a situation where the banks have gone bankrupt. Government always
yeah.
backs them. And there's a logical reason behind it, because if the government doesn't back them, then the whole system and the whole economy will collapse.
Yeah.
Correct or no? Because one bank defaults and they have like lakhs and lakhs of investors and depositors. Of course, uh, it'll have a repercussion on the whole system, right?
Yeah.
Okay, great. Now, why have I not covered foreign exchange and all of that? Because that becomes part of your international uh, thing. What I'm looking at is only investment products. I'm not looking at what we spend and buy abroad and what is our foreign exchange reserve currency, all of that. No. This is how if you have 100 rupees and you put in money, that 100 rupees, this is your products which you can invest in, and this is the rate of return. This is your safety. These are your regulators. So that is why people invest, because they want capital appreciation. Okay. Now, what you do with the capital once you sell, that's up to you. You can put back into something better. You can put it back into your business after making money. You can also put it and buy something else. Okay. Okay, great. Now tell me something again. If you had uh, the same amount, okay, you said you can uh, invest, you can put it back into your business. How would you know which one is the better option?
I guess you don't like really know, because like at one point of time one thing could be better, but then like if situations change, then like that option may not be the best option. So I think like that is why you'd not put all your money entirely into like one thing.
Correct, correct. So that's known as risk diversification or asset allocation. If you want to call it in terms of finance, then it's called asset allocation.